Yo, what's up, guys? This is Nqobile Tembane from Top Traders South Africa, and I'm really excited today, guys. I feel low-key starstruck. just being honest. I'm just being honest. Yeah, it's always nice to sit with like an actual person who I'm gonna call you an industry giant though, because you've just a staple in the industry. I'm sorry, I'm even forgetting the introductions and all that. Yeah, sorry. Nqobile Tembane from Top Traders South Africa, and I'm sitting here with my amazing co-host
MJ Givens Kgasi.
Yes, and we're very excited for today. Like I said, guys, I'm excited.
You've been excited since morning.
Yeah, since morning. Sure. Yeah, I mean, guys, we are sitting down with an investor, trader, speaker, writer, photographer, chocolate eater, wine and coffee drinker, a sock wearer, but mostly teacher, helping people understand money and all in its aspects, from saving, investing to derivative trading. We are sitting down with Simon Brown today. Yes.
How's it, gents? Good to be here, man.
No,
Thank you so much for coming through.
Thank you so much. You know, I was actually quite surprised when you responded. I was like, no ways. Yeah, because we're always just trying to reach out to different individuals. So basically on this podcast, it's called Industry Chats Podcast. Mm-hmm. So we talk about the financial markets as a whole, from everything about it, you know, even the behind the scenes stuff that happens, to the trading, to the brokers, to the anything that has to do with the financial markets is what we're here to talk about today. And yeah, I'm excited to have
cool.
Cool, perfect. Yeah, how's everyone doing? How are you doing?
I'm cold, man. I'm from KZN. I don't do this Joburg winter nonsense. Otherwise, markets are largely up. I mean, I can't argue.
Yeah.
As long as the portfolio is looking green, then we can stomach it.
Yeah, that's great. MJ, how are you doing?
No, I'm doing fantastic. I'm honored to be part and parcel of this. I mean, Simon is being one of the people that we used to listen to on radio when we were still growing up, trying to figure out the financial industry and all that. To be sitting next to him, it's actually an honor. Yeah. So let me be like you. I'm excited, man.
No, that's great. Yeah. So can you give? I tend to think that there are people who don't know who you are. So can you just give us a bit of background on who Simon Brown is?
Yeah, I'll go all the way back, but I'll give you the short version. KZN, born and raised in KZN. Yeah. Got involved in the markets in the 80s. I was still at school.
The 80s?
Yeah, I was interested in them. But like, you got to understand, there was nothing back then, right? Yeah. I mean, forget there was no internet. There was no radio shows to listen to. There was no publications. I mean, the Finweek and Financial Mail existed, but they were for that didn't qualify me. But my grandfather had been trading in the bucket shops in Durban, and so he could teach me a bit about it. And I used to do charts by hand, you know, like literally get the paper, draw the price, come back tomorrow, draw the price. Yeah. And so that got me interested in the markets. And then I was always sort of doing bits and pieces, mostly buying stuff with the plan of holding forever. So I bought Pick and Pay, I bought Sasol, I bought iData, stuff like that. Just buying shares and sort of leaving them. And then in the late 90s, I saw this internet coming, and I thought there was something there. So I've started a whole bunch of websites. And one of them was for derivative traders in South Africa, SA warrants.
Okay.
Yeah. Warrants had come into the market in December 2007. By then, we've got internet. I'm trading a bit, but I'm just trading equities, small caps, and I'm losing money like a pro. Man, no one could lose money like me. So then these warrants come along, which are deeply complex, but the nice thing with the warrant, it's an option. You can only lose all your money, which I know sounds weird, but with other derivative products, you can lose more than you start with. So anyway, I'm losing in equity. So I think, let me go and start trading in these derivatives. All I did was, truthfully, lose money faster. I mean, because it gave me gearing, right? So now I'm just losing faster. And then I thought, hang on a sec. So I stopped, and I'd met someone online. He was a German living in Hong Kong. And he knew a bunch about options and option trading and strategy. The German option market was insane. I mean, at one point there were probably 1,000 options on Nokia alone. I mean, it was just an insane market. Yeah. Kids were trading it during their school break and lunch break and stuff. Yeah. So he taught me what these were. He taught me how they worked and how to understand the different outputs, your theta, vega, delta, gearing, all of those sort of complexities. And that didn't so much make me make money, but it stopped me losing money. But what I realized was that I knew stuff that no one else knew because I didn't have a German friend living in Hong Kong. So that's why I started the website. And that kind of just took off. And then in the 2000s, I was doing that, running SA warrants. We did a tie-up with what is now Fin24, it was actually part of the News 24 stable. It had been Money Max and a whole bunch of different iterations and the like. And then 2007, I moved up to Johannesburg. I joined Standard Online Share Trading. I worked there for a couple of years, left end of 2010. And since then, I've been running Just One Lap, the education website, doing columnists, doing radio. I have a show on Classic FM with Dominique Nsele, got me doing JC Direct, which I then moved into a weekly podcast, still doing that. Write for Financial Mail, MoneyWeb podcast, and then I do presentations for brokers. I do keynote speaking, etc. I would MC events, consulting, etc. But mostly, it's market focused because you know what I love about my job is I can be watching screens and technically I'm working, right? Price action, I'm working, but also it's different every day. Monday it was the something happens and it's exciting and thrilling, and hey man, Tuesday that's gone and there's a new thing coming. And it's not the same every day. If you've got a corporate job, invariably there's lots of repetition. And yes, I got to get to studio every morning at 6:00. But beyond that, what my morning show is going to be different every morning depending on what happened in the last 24 hours. And I love that constant just change, always changing.
Sure.
You know what struck me now is I'm forgetting that we are in a podcast. the voice, I'm listening to the voice, and I'm thinking that I'm in the car, I'm driving, and I'm listening to his voice. And it only comes back now when I have to speak. Like, whoa, he's actually here.
I forget to speak.
I forget to speak. That's Jenny.
You are doing a lot.
Yeah,
I do, and it's weird. I actually studied film and video. I wanted to be a movie maker, and that was my plan. And then I'd done a whole bunch in the 90s until I settled into this. In the truth of it, I was, in many ways, I was a serial entrepreneur. I love the idea. And the internet, you must understand now, if you launch your website now, you go to WordPress, bang. You want to do a newsletter, you go to MailChimp, bang. Back then, you wanted a website, you had to learn HTML. You wanted to do a newsletter, you had to get an email server. I had an email server lurking under my bed that I would plug in when I wanted to send and receive email. You guys don't even know what dial-up is, right? Paying by the minute, and maybe you were getting 56k speed. Now let's be clear, I've got 100 up, 100 down fiber line right now. So that is approximately, I don't know how many 100 times faster than what it used to be. And I was literally, so weirdly, my internet bill back in 20 years ago was probably 5 times more than it is today, but the service is probably hundreds of times better. It was challenging. Man, you dial up, you check a stock price, you dial down. Come back in 5 minutes, check. It was costing you cash.
Yeah, really. And you're losing on the other hand.
Well, you're losing in both hands, aren't you?
Interesting.
Wow. So you've been in the markets for a very long time, and I know that we have a fairly our following is fairly like the new guys, like new young kids, 18 to 25, a lot of guys, males, like guys who are just coming fresh out of high school now, people who are born in like 2000. For real, and people who are still in high school, who are like following, but they really want to know about the markets. But like, I want to know for myself is like, how different is the markets like compared to how has the markets like evolved over the years?
So that's a great question, and there are a couple of big changes. The first is it's global. 20 years ago, if I wanted to buy Microsoft, it was more than painful. Aside from, we still got foreign exchange control restrictions, but let's be clear, it's 11 million rand a year. For most people, that's not a problem, right? Only the rich oaks struggle with that. For the rest of us, it's like, 11 million, sure. But then, I think the limit, I forget what the limit was, but to get the money offshore and to find a broker and you had to send documents, it was just really, really difficult to be global. So you were very, very South African focused. Our market was also bigger. We had probably twice as many stocks. That's a trend globally. We're seeing stocks delist, and we can go down that rabbit hole if you want later as to why, but that's a global trend where we're just seeing exchanges shrink. Access to data. You know, the amount, I mean, the number of apps I've got on my phone with giving me real-time data, whereas back then, data was hard to find. I remember PSG launched something called PETS. I don't know why they called it PETS. And it was streaming live prices.
Yeah.
And they probably launched it in about 2002, 2003, and it was the first time I'd ever seen streaming live prices. Before that, you had to refresh an HTML page. You hit refresh, wait for it to come back.
Sure.
Wow.
It was weird stuff like that. My first broker who went online, you know, their online was, I can send them an email.
Okay.
That was a big advance.
Oh yeah.
Now, I mean, I don't speak to my broker. Why? Because I got internet. I got connectivity.
Yeah.
Even just the flow of data. So yes, there was Business Day, Financial Mail, FinWeek, Business Report, and the like.
Yeah.
There was no podcasts. I mean, podcasts didn't even exist 20 years ago. So that access to information, I mean, what your audience is able to gain as newbies in the industry and the knowledge that they can get is absolutely wild compared to what it was certainly 20 years ago. I mean, 10 years ago, things were starting to pick up. I mean, we were getting exchange traded funds, ETS. We could now go buy a ETF on Europe or the US or the world or Japan, and suddenly we could get offshore exposure a whole lot easier in that sense. I was working at standard online share trading. We were doing, I don't know, hundreds of courses a year to tens of thousands of people. So stuff was starting to happen. But there wasn't the ubiquitous access that we have these days. The likes of easy equities. Bring $100 and buy a share, local or offshore if you want. Things like tax-free savings, which is a huge incentive for people to get a little bit smart about the market. You don't need to be fancy. You don't need to know about Bollinger Bands or doji candles or any of that sort of stuff. You just got to sort of know, hey man, our government wants to give me some tax back, I should grab it quick. So we've seen massive evolutions in markets from the JSE perspective. I mean, they did the tie-up with the London Stock Exchange. They untied that in time. We've seen other exchanges come up, A2X and the like. And what we're seeing now, the sort of big edge that we're seeing is what's loosely called alternatives, but it's sort of structured products. People think alternatives, they think cows, they think impact and the like. And yes, but no, that's a huge growth space where we're seeing a lot of these structured products come through, which can cap your downside and enhance your upside, and those sort of products which are coming into market. And it's a smaller exchange, but it's a much more vibrant market in the sense of my options out there. And of course, my options are now global. I always dreamt of this idea that I would log on to my platform, my broker account, and they would show me a map of the world.
Okay.
And say, well, where do you want to buy today? And I would say, well, let's buy there or somewhere like that. Now, I don't quite have that, but I have the same thing where I log on to my broker, and they're like, well, what do you want to buy today? We've got 28 different markets, probably 200,000 different instruments. Which one do you want? Do you want vanilla? Do you want it in the CFD format?
Yeah, sure.
Suddenly all of that's available.
Yeah.
Sure.
I want to understand this. You're talking about 20 years, the experience of how it was 20 years ago, right? And I know today we have different types of traders. You find people will be saying that I'm doing day trading, I'm doing long-term investing. What type of a trader were you back in the days?
So as I said, I started just buying stuff for the long term. Started trading small caps, mid caps, sort of in the dot-com boom. Now for us it wasn't a dot-com boom because we didn't, although we actually had a lot of tech stocks. We probably had 20 or 30 tech stocks on the JSE. So I was trading those in the late 90s, and then some derivatives, the warrant options, which would be over your blue chips and the like.
Sure.
But slowly where my trading has consolidated down to, I spent 16 months day trading index futures. I love index futures. I love the product. I love the everything about it, but I hated day trading. It was just another job. And truthfully, it was a boring job. I sit there in front of my screen and I watch price action all day. I can't drink coffee because then I can't take toilet breaks because I'm watching 5-minute charts, or even in some cases 1-minute charts. So did the day trading and just, hated it so much I moved to Joburg and got a job in a corporate. So I've still always got I've got a core base of ETFs. I sort of look at it as a pyramid. The bottom of the pyramid is ETFs, a little over half of my investments. Then I've got what I call my death to us part stocks. Those are my blue chips, my long-term holds sitting there. Then above that, I've got my sort of second tier, which is, again, equity and ungeared. But those are stocks I'm buying that I think will do me well over the next year, 3, 5, maybe 10. I mean, if they carry on running, I've got no reason to sell. I'm not in a hurry. And then right at the top is the pointy part, which is where I trade. And I trade two things. I trade global indices. So I trade FTSE 100, Eurostoxx 50. I trade the Hang Seng. I trade the Nikkei 225, S&P 500, and Nasdaq. So I trade those indices. I'm trading them 100% charts, and I'm a deeply lazy trader, so my chart has 2 moving averages on it. That's it. 7 and 21, I don't look at anything else. And I trade those, and those, again, I can, what I like about it is I don't do short trading, so I don't make money on the downside. So last year when markets are falling, my system just takes me to cash, and everyone's losing money, and I'm sitting there like, yeah, I'm going sideways. But last year, sideways was winning, right? Because everything was red. And then I trade Aussie futures. But I trade Aussie futures usually pre-equity open, so 8:30 to 9 o'clock in the morning. I'm trading on a tick chart, not even a 1-minute chart. I'm not looking at anything except bids and offers. I'm just getting a sense of whether... I'm trying to see who's winning. Because I understand a market, particularly in Aussie, which is an index market, where if I make $10, someone out there's got to lose it. I'm trying to pick your pocket, and you're trying to pick my pocket. So all I'm trying to see is, well, who's got the most pickpockets? I want to be on their side. So I'm trying to see, I view it almost as a battle. Right? There's two sides. Who's winning? I'm the coward. I jump on the winning side. I'm not here to put my hand up and say, stop. I'm here to say, if you're the winning side, hey, I'm your friend. And look, as soon as I think you're losing, boom, I'm swapping sides. There's no, you know, and I'm just watching the price action. And you can see it from the volume coming through. You can see who's the oak who puts a bid, or do they jump the spread? Because at that time in the morning, you got a wide spread. So it takes courage to jump a spread. Now, maybe it's a short squeeze. Maybe it's bad news that came out overnight. Who knows?
Sure.
I just want to jump on that winning side. I want to grab myself 200 points profit. Bang. I'm done usually by... I usually do my trade at about 8:38, 8:40. And then I'm usually out within 10 or 15 minutes.
200 points.
Yeah.
Sure.
Yeah.
Guys, that's another level of trading, eh? I think I made a mistake by not bringing my notebook.
But it's a good thing. We're gonna watch this back.
By the way, guys, I'll be watching. I'll be on the comment section. Wow.
Yeah.
Wow.
Yeah. Sure.
Learning a lot in a short space of time.
Yeah, in a very short space of time.
Yeah. You wanted to jump in?
Sorry. I'm just like You spoke about you called them. There's a word that has for something on your portfolio. Your until death do us part. Yes.
Until death do us part is marriage vows, right?
Okay.
So the whole idea is you don't marry stocks or anything, but sometimes you're quite happy to. I mean, let's see how it goes. Now, a lot of those death do us part stocks, the marriage breaks down and they get kicked out the door.
Okay.
But the idea is these are companies. You know, let's go back to the 90s. I bought Pick n Pay.
Okay.
It was a great business for a long time, and then it wasn't. In the early 2000s, I was looking rudimentary fundamentals. I'm not a chartered accountant, as I said. I have very little formal qualification, and I was looking at the margins, and I was just like, this ShopRite company was starting to eat their lunch. And I'm like, and I was slow to respond and the like. But then I sell my Pick n Pays and I buy myself ShopRite.
Sure.
And since then, ShopRite's probably up 30 times and Pick n Pay's probably up 3 times. I mean, and you get it wrong sometimes as well. But those sort of companies are, you know, they're not going to be mining companies because they're deeply cyclical, although I did have Sasol, but aside from that, what I'm looking for, take ShopRite as an example, what are we always going to do? Eat. Okay. Like we're always going to eat. Now, when we're balling and things are good, we go to Woolies and eat, right? And then when times are tougher, we go to Checkers and then ShopRite and then Boxer and USave and sort of shop our way down. And then when we're balling again, we can shop our way back up.
Yeah.
But we're always going to be eating.
Yeah.
And you don't just want... So I look at a sector which I think... So I've always had the view, what's the big picture which is driving global economic growth? And there's innovation in everything else, but to me it was urbanization. urbanization. Because people moving into urban areas. We've seen it in South Africa, we see it in China, we see it in America, we see it everywhere.
Yeah.
And when that happens, it has fundamental differences in a very quick period. Let's take South Africa. Some people living in, I don't know, Nqobile Tembane in KwaZulu-Natal, and they move to eThekwini or Jozi or wherever.
Yeah.
Immediately, they've suddenly got better access to healthcare, so that improves their health. Their kids have suddenly got better access to education. They're probably getting themselves some mobile devices as well. They're entering that economy. They benefit, but the kids, the next generation, leaps even further forward. So they were shopping at a Spaza in Nqobile Tembane. Now they've upgraded and they're shopping at a Boxer or a Usave down in City Deep. Their kids are shopping at Shoprite or Woolies or wherever the case may be. So it's an expanding, I suppose we could say middle class, to use a blunt word. How do we make money from them? Well, telcos. But telcos don't understand what they are. They're utilities. They're trying to be banks. I leave them alone. Banks. We're all going to have bank accounts. I held Capitec. I only just recently sold them. I held them for 15 years. Bought them at $20. Sold them at 2,000.
Wait a minute. So you held it from
15 years.
15 years.
So I bought them 2009, just after the crisis.
And we spoke about this at some point, that look at where Capitec is now
Yeah.
if you bought it back then.
Hey, some of us bought it when it listed at $1. So I paid 20 times more than them.
And how much is it now?
So it's under pressure. It's over. So I mean, it got to 2,600. Last I checked, it was about 1,003, 1,004.
Okay.
But you know, people need bank accounts.
Yeah.
And the problem with bank accounts was quite simple. You went to one of the traditional banks, and truthfully, they didn't want your business.
Yeah, sure.
Because there wasn't enough money there. Capitec came along and said, boom, we'll charge you $5 for an account, and we'll take your business. And is $5 a lot? No. But if you sign 10 million accounts, well, now that's a lot.
Yeah.
ShopRite, we always got to eat. So I was looking for those type of businesses, those sort of companies, to put into the long-term portfolio. And then sometimes, so Capitec was there. Why did I sell it? Because I rode Capitec through its growth phase. It's now just a mature bank. There's new contenders coming to market.
True.
I mean, there's Time Bank, there's Bank Zero from Michael Jordan. There's every mobile network in the world suddenly wanting to be a bank. But they're also now expensive. You know, on a simple price to book, they're 4x. All the other banks are 1x, except for First Rand, which is 2x. But they're not going to be doing 4x the growth. They're going to be doing about the same growth. So suddenly it's a case of, look, I love Capitec, make no mistake about it, but is it going to do me another 200 bagger in the next 15 years? No. So
Possibly
then
not.
the question is, well, can I just take the dividends? Sure. But then there's another question is, can I take that money and deploy it somewhere else?
Okay.
Can I find the next Capitec? And to the question you're both asking, I don't know what it is yet. But it goes back. Let's be quite clear. I'm talking about Capitec because it's a stellar winner and it's nice to talk about them. But let's be clear. I'm talking about Capitec because there's Capitec, right? I don't have 7 stocks doing the same thing. My ShopRite's up 30 times. That's nice. But it's like some of them are not so many times higher. One of the beauties in the market, you put $100 in. Worst case, you lose $100. In other words, your downside is 100%. Your upside, you put $100 in. Well, you could have bought Capitec at R1 and sold it at 2,000 Rand and made your $100 into, I can't do the math, 2 million. Your upside is uncapped, so you've got an asymmetrical return where you can lose your money 100% in any one investment, but your upside is, short answer, unlimited, right? I mean,
sure.
At some point it is, but it's unlimited.
Yeah, I actually want to talk about that. What actually goes into, because holding can I call it a stock, right?
Yeah, it's a stock.
I call it a stock. Yeah, for 15 years, that's quite like that's a different ballpark all on its own. But like, because essentially a lot of people right now who are interested in like the financial markets they want their monies now and that, and I think that's also part of the reason why a lot of people aren't making money is because everyone like wants their money like now and all that. Like, what actually goes into holding something for 15 years? Because I'm pretty sure over the years you might have wanted to cash out.
So I did cash some of them simply because it was doing so well it becomes too much of my portfolio. There were times when Capitec's like, I don't know, 40-50% of my portfolio. And that, and I've had this debate with myself and other smarter people many times. the problem with rebalancing is that when you rebalance your winner, you actually make less money because you're selling some of the winner. The flip side is that if you don't rebalance, what happens if Capitec was African Bank and goes bust? About 2,000 Rand stock is now a 10 Rand stock, and after 15 years, I've lost half my money instead. So it's managing that sort of process. But you're right. Who isn't in a hurry to get rich? I mean, of course, like no one's like, no, I'll get rich next decade. Like, no, man, I got plans for the weekend. I want to be rich. And the market seems like a place where you can. Truthfully, there's one way we get rich in a hurry. And I have everyone's attention. Well, aside from robbing banks, which is a terrible idea. Well, because think about it. Firstly, banks don't actually physically have money, and secondly, they might shoot back. So that's a terrible idea. The only other way we make money in a hurry is we marry money. Right? Go find out where the rich, hot people are, then marry them. Otherwise, it takes time. And the thing with folks who come to markets, and whether that be ETFs in a tax-free or trading 100 times geared FX on the other side, is they look at it and they think, this is easy. Now, the access is easy. You know, all you've got to do is some FICA documentation, bang, you're in. But it's like any other skill. Like if you want to be a plumber, or a brain surgeon, or anything, or a baker, or anything in between, you've got to learn the stuff. Now, either you're going to varsity or college, or maybe you're doing an apprenticeship, you're learning the stuff. And it's going to take you some time before you think to yourself, I'm a bit of a master of this. People come to the market, do their FICA, and think, I'm a master at this. No, man, you're about to get separated from your money. It is going to be painful. There might even be tears. And it's that. And it's the ease of access. Now, should we put guardrails in place and say, sorry, gent, you can't come. Nqobile, no chance. You're too young. You're not. No, man, that's stupid. That's stupid. Guardrails are the last thing we want. What we're going to do is stuff like this. Is we're going to talk to people. It's why when you drop me, I think it was LinkedIn or whatever it was, you drop me a message saying, come talk. I'm like, sure. Because how are we going to help people understand that there's stuff to learn? Well, by teaching. By talking about it. By having these conversations.
True.
And someone's like, And the point of this is you and three of us can talk for days. No one's going to take everything we say. But they take one or two things and they implement that and they move forward and they get smarter.
Sure. Anything in the with your portfolio, with regards to your portfolio, anything in the crypto space?
I got some Bitcoin.
Okay.
So
Still holding?
Yeah. So I've got a friend who's a cryptology expert. And we were mining Bitcoin when they were like 5 cents a coin, 10 cents a coin.
Is it?
But I had to stop because it was slowing down my computer and I wanted to play games. and then I sold most of them like at $200. Thought I was a genius. To me, I'm keeping the crypto as a. I've traded crypto in the past on a very, very dodgy website out of Singapore. Was it Singapore? No, not sorry. It's Seychelles, not Singapore. My bad. Sorry, Singapore. Your FICA requirement was give us an email address. They never verified it. They just asked for it because you just used blockchain to transfer the money. But their system kept on going down, and so I was basically doing what I was doing on my Aussie trading in crypto. Now I just hold it. Do I think that Bitcoin or crypto generally is the future of money? No. Do I think that that Bitcoin could go to 1 million? Sure, because I've seen so many crazy things in this market. And Bitcoin at 1 million or 10 million or $10, whichever it is, it's just another crazy thing I've seen. So I hold a couple of them. I was stocking up at around 8,000. And they went to 60 and then 15 and now 30. So I'm a hodler in the sense that at some point I'm going to look at it and it's going to be such a large sword of money. I'm going to be, you know what? I'm going to take my money and run. For now, I just hold it and see what happens with it.
What do you think of the recent downfall of Bitcoin from the all-time high?
Yeah, I mean, so it's going to be massively volatile. I mean, that is just the crypto space generally is just going to be volatile for a lot of reasons. Ease of access, the reason why people are in there because they're hoping to make quick money in a hurry, etc. But I mean, it hit 60,000 down to 15, up to 30. We've got a halving happening probably around April of next year. That's usually bullish, although if you note the halvings are becoming less bullish as time goes on, I think because more and more people are sort of catching on to that idea behind it.
Oh, yes.
But there's a, you know what's weird? So what is the value of Bitcoin? Total value, I don't know, $1 trillion maybe?
Yeah.
Let's call it $1 trillion.
Sure.
Let's say the entire crypto industry is $2 trillion. Okay. It's a big number.
Yeah.
Apple's $3 trillion.
Yeah.
Now, Apple trades on one exchange, New York. That's it, one exchange. Crypto, there are thousands of exchanges and stuff like that.
Yeah.
So if you look at it in the big picture, crypto is tiny, tiny, tiny.
Sure.
It's absolutely minute. Yet it has an outsized influence in the sense that we're talking about it. When I intro my podcast, what do I do every morning? I talk about, the markets in North America. I talk about markets in the East. I talk about commodities. I mention currency. I mention Tencent because of the influence to NASDAQ.
Yes.
Yeah.
And I mention crypto.
Yeah.
Like I don't mention Apple's share price, but Apple's, so it's got an outsized influence in the mind of people. And that's interesting, because we always got to remember what is ultimately a market. Yes, it's numbers, it's companies, it's widgets, it's iTunes and all of those things into it, but it's people. And people are emotional beasts. We suffer from FOMO. I heard a great phrase yesterday. What was it? SOBs. And now I can't remember what it even means. But the sucker buying too late and that sort of thing. And markets are around emotions. And what crypto has, Bitcoin in particular, but crypto, is it has mind share, and man, it has emotion behind it. There are people out there who tell you that fiat currency is the end of the world and it's all going to be crypto. It's crazy talk. But these people are some of them are, running for presidential elections in the US. So, they've again got mind share.
Yeah, and I was actually coming to talking about the fiat currencies. Actually, that was actually like what, especially BRICS right now, especially like people involved in the financial markets. Is BRICS something that we should actually be like focused on, or is it like something that we shouldn't even like give a thought to?
Look, I love the idea of BRICS, and I'm old enough to remember when the coin was phrased about 20 years ago. And of course, then it was BRIC. There was no S.
So we were not part of it.
No, we got Tom and Becky sort of, actually, we sort of got attached as the S at the end. Brazil, Russia, India, China, South Africa.
Yeah.
I like very much the idea that there is a emerging market bloc to sort of act as counterbalance to the likes of G7, or just the US, G20, Europe, etc., etc. I like this idea very, very much.
Okay.
I just don't know that necessarily it's BRICS for two reasons. Because if we're looking at this as an economic concept, which it is, that's fine. But we can't divorce it from its political concept at the same time. Okay. And then there's two issues in terms of that. On the economic side, we've got China. And then we've got the rest of us. And China is like, I don't know, 4 times bigger, 5 times, 10 times bigger than all the other BRICS put together. So there's a complete disweight. That's on the economic issue. On the political issue, well, we've got China, who, let's be clear, I know they have elections as long as you vote for, well, there's only one candidate, right? I mean, you can vote for the Communist Party or you can go to jail. I mean, those are your options, right? So from a political perspective, we've got China, which is, yes, they're westernizing, yes, they're capitalizing, but let's be clear, they're an oppressive regime. I wouldn't have made that statement if we were in China, because I wouldn't have got home.
Yeah.
And then
You'd be in prison.
and then we've got Russia.
Yeah.
And we don't have to say anything more about Russia.
Yeah.
So I don't wonder if... I don't know what the longer term future of BRICS is. I know we've got the August meeting. I know there's talk around a BRICS currency. We can touch on that in a moment, and currencies to come up against the dollar.
Yeah.
But from an economic and political, I'm not sure what the longer term future of BRICS is. I think that we should look to sort of structure a new one. Let's call it the EM20, Emerging Market 20s. Let's go find some Asian, some South American, some African. We can bring in Egypt, Nigeria, Kenya, and South Africa from this continent. We can bring Brazil, Mexico, and a few from South America, some Asian economies, and let's build a sort of a counterweight to the developed market economies. And we will be, mostly resource-based economies in many cases, and that's fine, and we're different. But there's benefit to, trading with friends in a sense, and having those sort of relationships, both at a political and economic. I'm just not sure that it is BRICS, because BRICS is, as I say, fundamentally different to what it was. 20 years ago, Putin had been in power for a few years, and people were a bit skeptical of him. But he hadn't invaded half of Georgia, Crimea, Ukraine, poisons people he doesn't like when they live in London.
By the way, Simon, it's not only us. We have a ghost bishop behind the camera, so don't be surprised when you hear it's not a voice from heaven. It's actually that gentleman. Come in, Bishop.
If I may come in there. What's your take, Simon, on central bank digital currencies? Because I know some countries have already rolled out theirs. Countries like Nigeria, Bahamas, even though some are still, pilot projects. But what's your take on it?
Yeah, and I mean, China's quite advanced with it. Our own Reserve Bank is got a white paper in making process. Even the Federal Reserve in the US. So I mean, ultimately, I mean, sure, I think it's going to happen. I think it's a great idea because, truthfully, money has been digitized. So I'm old school. If you check in my wallet, I've got old school randellas, okay, like $100 notes and $10 notes. But these days, we don't use money to transact, right? We pay with our phone, our watch, our credit card, our, we don't Vimeo in South Africa, but, zip type of stuff. So money's become totally digitized. And I think what we're seeing with these CBDCs, central bank digital currencies, is sort of a closing of that loop of the digitization. Because at this point in time, when I'm moving money from me to you or something like that, we're going through intermediaries. We're going through the banks and all of that sort of thing. And of course, they're taking fees and they're slowing down the process. I moved money and it still took a day to get to the destination. I mean, like I live in the future. This is 2023, and it took 24 hours. Whereas in a digital currency, in theory, man, we just tap phones and there's no intermediary. Boom, my CBDCs are in your account now. Money transferred.
Yeah, because they are programmable, and most people, they fear that maybe it's going to give governments more power over the citizens. So
that becomes interesting because the programmable part is what really interests me in blockchain and NFTs. Now, let's be clear, NFTs have collapsed in a heap, but that doesn't mean that they're over. And so, I mean, what the government could do, as one example, they could do a 2% transaction tax. Okay. So I sent Nqobile $100, but he only gets 98. Government's like, thanks for playing. So there is certainly risk to that, which, of course, the deep irony is that what's at the heart of Bitcoin is getting away from government and state and all of that sort of thing. The beauty of it is that if it is, whatever these CBDCs end up looking like, is that we can see into them. So if it is programmed to take 2% or to flag a button somewhere at the Reserve Bank edifice in Pretoria to say, yo, Simon's sending money to these young kids, what's the story? Whatever that might be. Then we can look at that and say, well, I'm not going to do that. The beauty of Bitcoin was that it was going to be untraceable. Now it is not untraceable. Untraceable is US dollar, crisp notes, randellas. I give you a 100 Rand note. That is 100% untraceable. I gave you money unless anyone was watching. No one knows that I did or what you did with it. So there's certainly risks there. We'll see how it plays out. The beauty is we will be able to see into the code and we'll be able to see what's doing. Now, there's a dystopia future that looks like the book 1984, where all other phases of money are banned and there's only CBDCs. And it's not just that they can program whatever into it. They can also say, but Simon, man, we saw what you did at the bar last night. So you can't spend money at a bar for the next week. Or we see that you're not spending enough on, I don't know, healthy food. So you're blocking McDonald's, but you can buy at the health store or etc. Notwithstanding tax and all the other bits and pieces too. So, I mean, it's relatively early days. I mean, we've got to remember, Bitcoin's 13 years old. I mean, in the scope of things, nothing. It's a teenager.
But what do you think of the new emerging payment system? Because I saw now in the States, the Feds, they've got the new one, the Fed Now. Apparently it takes 20 seconds to send money from one account to them and from them to the other parties, another 20 seconds. Generally it takes 40 seconds to send money from South Africa to the UK.
And this is what we're seeing. When I say we live in the future, I mean, this is what it is. I mean, none of you will know what I mean when I say postal orders. So you would go to the post office, give them $10. They would give you this little thing, a certificate that I would put in a letter and post to you. And then you would go and cash it in and get your 10 rand.
Yeah. Sure.
Because that was how you moved money around. I mean, that was the process. I mean, it was ridiculous. And what we are seeing in the payment space, and this is partly an offshoot from crypto, but it's also just partly an offshoot from technology. And I think from banks maybe being shaken by crypto. Banks looking at this and thinking, hang on a second, we need to get a little bit smarter, otherwise we're going to have our lunch eaten. So now we can make those payments. I mean, what's the one in South Africa? I forget what it's called. PayShop.
PayShop, yeah.
I haven't used it, but apparently, money in a moment.
Yeah.
If we're on the same bank, and it depends on the bank, I can transfer money and it gets to you immediately. And there's no reason why not. I mean, it's digital monies. 40 seconds. The question we should be asking is, what are you doing for 38 of those seconds? Because this is data and it moves at the speed of light.
Yeah. Want to come in? You
Wait,
come in?
no, wait. Still processing.
Maybe to change the tune a bit. Penny stocks and blue chip stocks, which one are your favorite? I know people like Warren Buffett, the big fans for penny stocks. What's your take?
I mean, I have both. I like the blue chips because they're boring, they're dependable, they pay me dividends. I mean, talk about the Capitec. I probably got more than I paid for those shares in dividends over the period that I held them. Okay. My ShopRite shares, I paid $8. I'm probably going to get $8 dividend next year. Every year, and I still hold the share, which is worth 240. So your blue chips have got a place. They more dependable, more reliable. They're less likely to go bankrupt, and I stress less likely because African banks, Steinhoff, Tongaat, we've seen this hit the wall. Penny stock's no problem with it, and to me, a penny stock, I would rephrase that and say a small cap. Which, Colgra M3. I mean, they're not a penny stock. They're trading at about $3.30. There's about, not technically a penny stock, but higher risk reward. And if you get those right, you can do spectacularly well. Let's be truthful. When I bought Capitec, it was a small cap.
Yeah.
If you bought it at IPO at R1, it was a penny stock.
Yeah.
Every big company out there, every Apple, Microsoft, ShopRite was once a small cap, was once a penny stock. The inverse is not true, in that every small cap, every penny stock doesn't necessarily become a Microsoft.
Okay.
And it's about building that portfolio. And as I said, I've got my ETFs, I've got my blue chips, I've got I call them second tier, they're the small cap stocks. And then I've got my sort of more speculative and then my Aussies and that sort of stuff up there. And it's around sort of building it up and having those different building blocks in space. On the true sense, if you see a share that's trading at 1 cent and you think, if I just buy it at 1 cent, I can sell it at 2 cents. It never works. I mean, firstly, the queue of buyers is 500 miles long. So either you've got to buy at 2 cents rather than 1 cent. Now you just doubled the price you're paying. And then when you try and sell it at 2 cents, there's a queue 500 miles long of sellers. And I know this because when I was starting in markets in the 90s, I went through the newspaper and I found the share trading at 1 cent, 2 cents. And I said to my broker, please buy it. And he's like, sure. But he bought it at 2 cents. I'm like, Anyway, then I tell him to please sell it. And he said, sure. And he sold it at 1 cent. And I lost half my money. I was supposed to double my money. Instead, I lost half. So it's just that the width of the spread is absolutely killer.
Yeah.
Sure. Thing is, there's a topic that we need to go into, but I don't want to go into it yet. I'm still enjoying this, right? Okay. So I want to ask right now. Essentially, like I said, we've discussed how the markets have kind of evolved over the years, but also the industry as well. Because we always say there's two sides to this. There's the financial markets, the trading, and then there's a financial business side of things, which is the teaching and all that. How have you seen the change, especially in the business side of the industry as a whole, seeing the new participants coming in over the past 10 years, and so the Instagram guys and all that.
I think it's this is an industry. I joined it formally in 2007 when I joined Standard Bank, and by then the change was already quite apparent.
Okay.
But if you go back into the 90s and then even further back, it was, with all the respect to the industry, it was a room of old pale males. That's just what it was.
Yeah.
It was an old boys club. Getting in didn't matter what your knowledge base was or anything. It depended on who you knew, or if you had enough money, you could just put a wad of cash on the table, and they're like, oh, you're my friend, come on in. And they were very, very closed and didn't want outsiders and stuff. I mean, I did my first account. I mean, I couldn't open a brokerage account because this is in the 80s. I think they wanted 20,000 rand.
Okay.
Like, come on, I'm a kid at school in the 80s, 20 grand. But my grandfather twisted some arms and stuff because, he was an old pale male.
Okay.
They got me in, and I didn't know at the time, but he paid my brokerage. I didn't know they were. So I bought 120 rands worth of shares. My brokerage was 290 rand or something.
Okay.
Fortunately, he paid. I didn't know.
Yeah.
But it's changed, and I think I know that like people talk around tradition and stuff like that, and I get it, and I get why tradition's important and why it matters. But I also think that there's time to burn tradition down. Well, not burn it down, that's nasty. But to say to tradition, you know what, you go stand over there because we're doing stuff here and we're new peeps and we do it different.
Okay.
We don't want to be doing stuff like we did in the olden days. And let's take it to the extreme. The olden days. Let's go back to this 1800s. Where like the English bathed once a season, and if you were lucky, you could if you wanted to go to another town, you walked to that other town. There was no telephone. You wrote letters, but you couldn't afford it, so it was cheap. Life expectancy was 40 years. No, we don't want any of that. We want modernity. We need change. Change is important to people, to industries, to countries, and ultimately to planet Earth as we sit here now. We've got climate change. It's an existential threat. We need to change how we do things now so that we can survive into the future. And I think to the point is that I think this industry, to a fair degree, has changed. I think there's still gatekeepers. I think there's still difficulty. I still look around and think like, you folks have never heard of that diversity word. And I believe this completely. A group of 10 white men sitting around a table planning the future are weaker than a group of 10 diverse people. Because the white men all come with the same sort of background, and I know that some of us are from Durban, some went to fancy schools, some didn't, but we got the same thinking, the same mold. Whereas you need some women, you need some color, you need some short people and tall people and old people and young people and LBGT. You need those different voices.
Okay.
And the data shows quite equivocally that the more diverse, the better companies or organizations are run. And here's my favorite stat, and I don't know if it's still true, but it was true. There were more people called Dave running companies listed on the London Stock Exchange than there were women. More people called Dave than women. And I look at that and I'm like, you people are drunk at the wheel. So I do think things are changing, and I think that the peeps coming in with the Instagrams and TikToks, and I'm a Twitterer. I love Twitter. I actually, as I say that, I actually started a TikTok account at the beginning of January, and then I forgot to post ever again. Anyway, and I look at some of the stuff on Instagram and TikTok, and I'm just like, I don't know what you kids are doing. That's cool. That's cool. I'm not supposed to know.
Because you cannot relate.
That's fine. That's totally fine.
Sure.
We need to get comfortable with I'm not going to be here forever, and there's new people coming through, and must they do it my way? No, man. You must break it down and do it your way, and take the bits that you look at what's currently are. You will take that bit, we'll take that bit. Well, that's rubbish. We can do that better. And do it better. And evolve it and change it. And the idea of in the olden days, someone would seriously at the end of the market do an interview and talk stuff like that. No, man, someone now does a 60-second TikTok.
Yes.
There's a market out there.
Yeah,
sure.
that's true.
100%. Let's roll. Let's do it.
No, 100%. No, perfect.
So this podcast, I mean, I do radio all the time, and it's usually very formal.
Okay.
Nice to have Mr. Simon Brown here today. How are you? And that's cool. That's perfectly fine. But there's other ways of doing it. And let's embrace the differences rather than pushing back and saying, oh.
No, I like that. I like that. Have you ever been a victim of any investment that went horribly wrong?
Yeah, but it was all my fault.
Okay.
Oh, yeah?
I mean, I've bought bad investments. I'll tell you my worst investment ever. So a company called Brainware, run by Pete Demboer. It is, we call them PowerPoint companies. Basically, he got hold of a bunch of companies, put them together, listed on the market, and they were R1 a share. I bought 20,000 shares. So I dropped 20K in it.
Okay.
This is about 1996. It's in tech. Now, this is early. .com's not here yet, but we know that tech is big, right? Amazon already exists. We've got internet. Stuff's happening. Email. This is going to be big. The stock goes to, I don't know, $6, $10. My 20K is now worth 150, 200K. Get it? This is the 90s, man. I'm not, I'd like, man, this is big money. I just bought a house for about that much money. But I don't do anything. No, man, because I like 200K is nice, but I want 200 bar or whatever. Yeah, well, it didn't quite work out. It then collapsed in share price. It then got cleaned out. It then did a split. It then became Southern Electrical Company. Pete Dumbo is now passed. Anyway, so I bought this in 96. I got paid out in about 2014. I got $50. Whoa. So my 20 grand became $50. The worst part is over 17 years, right? Or 15 years. If I put the money in a boring bank account, my 20 grand would have become, I don't know, 50. Instead it became 50, but not 50,000, just 50.
Did
so
you cash it out or?
Well, they delisted, so I got sent a check.
Okay. Did you check it though?
No, I checked it. I felt a little awkward, but the bank teller didn't look at me weird. She was like, stamp, bits of paper.
If only she knew that this was worth 20,000 rand at some point.
I mean, even just adjusted for inflation, it was now worth 80. I mean, but so I mean, and so in more recent years, and by that I'm going to say the last decade or more, I haven't had a bust out. Now, I would like to say that's because of my deep skill, intellect, and ability. Truthfully, there's a large amount of luck there as well. I didn't own African Bank, and I had a long, hard look at it, and there were some red flags for it, but before even the red flags, I was like, I kind of like the business, and I like what they're doing, and the like. But I owned Capitec already and preferred that.
Oh, okay.
I didn't own Steinhoff because I looked at it and it was just too complicated. And I'm a simple oak from KZN. I don't buy complexity. So I didn't buy it because I thought it was a scam. I bought it because I thought it was too smart for me.
Okay.
Okay.
I'd own Tongaat, but then Tongaat was a stock you would trade more than own. So I've sort of in a sense been, some of it is, my good street smarts, but some of it is truthfully just luck. Sometimes you just buy something and out the blue, something goes wrong or an industry gets disrupted or just horrible stuff. But I also tend to stay away from the riskier stuff. I mean, you were asking around penny stocks and small caps. I mean, even there, I'm looking at Calgary M3. This is a company with probably 20 years track record. They had a really, really tough couple of years, but they've sort of turned the business around, and they make low-income housing and high-income housing. I was going to say South Africa. We need housing, yes.
Yeah.
But most of the world needs housing.
Okay.
And these guys do it really, really well. Are they likely to go bust tomorrow? No. Could they? Sure. I mean, they almost did go bust a couple of years ago, so it's not impossible. But I'm not going and buying that new startup, that company that's got this, I don't know, blood pressure thing where you look at it and it can tell you what your 17 ailments are and then print out your medicine, and which, if it works, will be a multi-trillion-dollar company, but it probably won't. Yeah.
Sure.
You want to get into that other topic?
Okay, let's talk about PIPCOIN. 200 million rand, around about 200 million rand, we can say that.
North of, but
north of, disappeared, and no one knows where that money is.
Oh no, we know where the money went.
Oh yeah?
It got spent. No, come on, look at
It got spent by who?
Ref Wayne.
Yeah.
No, look at the videos he was posting. So this was, of course, TikTok and Reels and stuff. So it was on Facebook mostly.
Facebook.
But first class flights to Dubai and 7-star hotels. I mean, it got spent. I mean, it's just that simple. And that's it's the one thing. When people do a scam, and PIPCOIN was an out-and-out scam, and refs threatened to sue me before, but not. When people do a scam, what they then do is they blow the money.
Okay.
No, man. My uncle, who maybe he did do scams, he's passed now, so it doesn't matter. He's always like, if you do a scam, don't blow it.
Yeah.
Buy bonds and live off the interest. If you win the lotto, don't go blow the money one weekend.
Yeah.
Go have a big weekend, but then go and secure your financial future.
Yeah.
So this was what, 2016. I get these scams all the time because people message me and say, does this look legit? And there was nothing about PIPCOIN that looked even. He claimed it was a crypto, but it didn't have a white paper, it didn't have a blockchain, it didn't have a buy and sell. It was also one of those, if you introduce friends, you make more money. He also promised certain levels of return. So it was your classic pyramid type scam, etc., etc. And at the core of it was FX. And there's an interesting thing here. If you think about, Ref Wayne was trading FX, and there were a couple of them in Soweto at the time, a couple of young guys trading it. And you can see him thinking, back to your question, but what is currency? What is a rand? Why, when I give you 100 rand, are you impressed? But if I give you monopoly money, you're like, come on, dude, get real.
Yeah.
It's trust. So he thought, I can make my own coin. And you can, because crypto does this. I made a cryptocurrency because the software is there, you download it, you run it, but no one wanted my coins. So, there were a billion Simon coins and they're worth nothing. And he just did the usual thing. And the problem, but by that I mean, is promising vast amount of returns, a flashy lifestyle, etc., etc. And then ultimately the money just disappeared. Got spent. And you can spot these at 100 paces.
Okay.
The problem is people want to believe. I hear about them because people message me, email me, whatever. They say, what do you think about this? And I can spot the scam almost immediately. No FSCA, no white paper, just like returns that are too good to be true. And you say to the person, it's a scam, and they argue with you. Well, they weren't looking for me to tell them was it or wasn't a scam. They were looking for me to say it's legit. Why? Because we're in a hurry to be rich. So they play to our deepest emotion, which is everyone. Even Warren Buffett, if he saw $1 on the road, he would pick it up.
Yeah,
one of the richest men in the world is not going to be like, I don't need $1. He's going to be like, $3. Got it.
That's true.
That's human nature.
Yeah.
And so, there was another one just this week that the FSCA has warned about. Usually by the time the FSCA gets involved, Financial Conduct Sector Authority or other way around, by then it's
a bit too late.
It's a bit too late. A little bit too late. But we see them all the time. What interested me particularly with PIPCOIN was that there was a different structure to it, which was that there was this PIPCOIN. We then got something called SAFCOIN a couple of years later, which was the difference there was they actually had a white paper and a blockchain and everything. Now, if you read the white paper, it was incredibly weak.
Okay, so can you just explain the white paper?
So the white paper is the philosophic, the thinking behind the coin. So go to Bitcoin, there is a Bitcoin white paper. It's 9 pages long. It's an easy read. You don't need to be fancy. It talks about things such as hash rates, how's it going to work, the halving protocols, what the philosophy is, what the thinking behind this is, how it's going to work, who's going to administer it, and all of that sort of stuff. So it's like the DNA of the crypto. But then, SAFCOIN, and at the time I said it was a scam. I got lawyers' letters. I've had hundreds of lawyers' letters. I've never been sued, but I always get the letters. And the difference was that they did create a coin.
Yes.
But they sold them at $75 a shot, and the folks who sold them made 75 rand a coin. The folks who bought them have got coins that are worth a few cents each. Because there's no... anyone here heard of SAFCOIN? In fact, they're no longer even called SAFCOIN. They something. It was it was a ninth tier type of coin.
Okay, so essentially, we were on a podcast it was a roundtable discussion about, and the PIPCOIN chat kind of came up in the whole thing, and essentially, Riff said it was a peer-to-peer system. So in other words, the money would come from MJ, go through an escrow account, and then come to me.
Yes and no. The yes part is that's what he says. The no part is that there was no system. There was no system. There was a bank account and a very, very rudimentary website, which had almost no security. The weird thing is these guys will do these websites, and there's no security. They usually WordPress. You go to the admin page, you put in username admin, password, and looky where I am. And no, I did not do that to RefWayne. But no, it wasn't. There was no system. There was no system. We saw him as PIPCOIN was starting to collapse, so probably early 2017. He was actually putting adverts out for someone to design him a website that looked like you could buy and sell PIPCOIN, and that looked like it would be an escrow type of system. But there wasn't anything there. And certainly he had billed it as he was Africa's youngest billionaire. He was going to bring vast wealth to the people via an African cryptocurrency, which is a compelling story. Don't get me wrong. Absolutely. Yeah. To your point about CBDCs, maybe we should do continental rather, or something to try and, mind you, then the governments would just cohort each other anyway.
Yeah,
so.
they will come in definitely.
And it was a compelling story. But what he promised was, you bought these PIPCOINs, and there was no price of the coin or any infrastructure or anything, mining tech or anything like that, is that you would make 35% in your first, and I forget the time horizons. Yeah. And that was his early start. And then he started this PIPCOIN's going to be the currency of the continent in the future. And look what Bitcoin's done. It was 1 cent, and now it's whatever it was back then, 20,000 or something, etc., etc. So he's riding on that crypto story very much. But there was no underlying tech whatsoever. There was none whatsoever. And at the same time, he's schooling himself or presenting himself as a FX guru trader. I have no comment on whether he is or isn't. I don't know either way. I got to say the very successful FX traders I know are typically fairly low key and spending time with their money, not on TikTok.
And we always say that, guys, we can't stress this much, that most people that are making money out of the financial markets are not well known out there.
Yeah.
Because they understand that the money that they made comes in a hard way. And it's not actually theirs, because they can be leveraging on that to say the money that I got within a short, maybe 15 years that you got your Capitec. 100%. And you're always thinking that, what am I going to do with my next 15 years? Yeah. And by that, you're doing your own research. We actually waiting, by the way, for the next Capitec before we finish this room. You need to tell us that the next Capitec. Yeah, so most of these guys, they know that, okay, fine, this is the amount that I can be cashing out. You cashed out probably, obviously, before the 15 years during the 15 years, isn't it?
Yeah, I was cashing out just because of size. I mean, I forget how many shares I bought, but I bought at $20. I sold some at around 200. I sold some at around 900, some more at around 1500, and then the final bit. I mean, I went to 2600. I never sold at 26.
Okay. But you already had a plan with that.
Yeah, I mean, it's a plan. The plan's adapting, and I think that's also one of the things. The plans are adapting. Yeah. But to your point around successful traders, I mean, firstly, they don't need to solve the system because they've got the money already.
Yeah.
What you will find with successful traders, and is that they will share their knowledge.
Yeah, sure.
But they're not going to go out there and tell you, let's get rich by the weekend, because they know that's not true.
Definitely.
Because I mean, I spent 5 years losing money in the markets. 5 years. Yeah. I mean, I still got all my fingers, but there were some close calls. And now I can, after 5 years of losing, finally I started to break even, and I started to learn the psychology of it. I started to learn risk management, position size, all of those sort of things. And then finally I start to make money. And also you find the niche that works for you. As I said, I trade indices. There's certain reasons why I trade indices. Yeah. Other folks are like, I don't like indices. I got a friend who trades shares on the Singapore stock market.
Okay.
And I said to him, why Singapore? What do you know about Singapore? And he said nothing.
Yeah.
He said that's exactly what he wants. Okay. It's just a price and a ticker code. He doesn't know what it represents. Because it's so hard when I'm looking at the Eurostock 50 and it's telling me a buy signal, and I'm like, but hang on. Let's be clear. There's war in Ukraine. There's energy crisis. I mean, Europe is a mess. There's heat waves, etc. You're telling me to buy it? But I've got to put all that aside because the price says buy it. So what he says is, by trading Singapore, there's a stock and it's called Knong 7. What do? Never heard of them. It's going up. Cool. I want to own a slice of it. Because at the core, and trading is distinct from investing. The thing with trading is you want to own things that are going up, be short things that are going down, and if you can't determine the trend, sit back and watch. I always say your best thing is to find a 6-year-old, show them the price chart and say, where's it going? Because they will give you an unbiased. So I did it with my niece. So she's now 13, so she's far too old for this game. But I would show her a chart of whatever. And she would be like, she thought I was being silly. She says, it's going up. It's going down. I don't know. She could do it in a second. Now, did that make you money? No, because it's not quite. But you want to find the trend and hop on that bus until the trend bends in the end, and then you jump off. We believe as human beings, we believe in complexity. We believe that in order for something to be great or grand or something, it needs to be complex. And that's not true. I mean, back to Bitcoin and the white paper, Bitcoin is not complex. It's an innovative idea, sure, but it's not massively complex. And we look for that complexity. So when we're looking at charts and trading, and you open your chart your package and you find hundreds of indicators and oscillators, you think to yourself, somewhere in here, I can build the most complex machine in the world, and it'll make me a fortune. But the problem with complexity is there's room for error. There's room for, one of the most successful traders I know is probably making, I don't know, $500,000 a year, and he's just trading the Bitcoin arbitrage between Rand and dollar. That's all it is. He wrote a little script. It runs out of Excel. It's running a little script out of Excel.
No charts involved.
No chart. Just when the arb is big enough, buy here, sell there, move across, buy here, sell there, done. Thank you for playing.
It's amazing. We're actually having a conversation with Bishop about it yesterday.
Oh, yeah?
Yeah, just no charts. Making money off Excel.
Yeah, just off the arbitrage because of liquidity. So the exchanges in South Africa are less liquid, so there's a disconnect between the price. It's how Sam Bankman-Fried made his money. He was trading the arbitrage between Japan and Bitcoin in Japan and back in the States.
Sure.
What do you think happened there with FTX?
Fraud,
yeah.
Simple.
Yeah, was F maybe standing for fraud?
I was going to use a different F, but fraud's a good one. I mean, did he start out to do fraud?
Yeah.
No. Okay. I don't think Ref Wayne started out to con either. There are some people who wake up in the morning and say, let me be a criminal. Yes, of course there are. I think most people who end up being a criminal never woke up expecting that. It just kind of happened. And I think Sam Bankman-Fried really did think that he could change the world. He could do altruism, whatever. He could create this platform and et cetera, et cetera, et cetera. But then ultimately, at the end of the day, it was fraud. It was commingling customer money. It was sending customer money across to Alameda, which had no right to it. It had no checks and balances. It had no compliance. I mean, I've worked in a stockbroker, and I did it over the 2008-9 financial crisis. And after that, we saw a lot more regulatory environment coming in, Basel III and compliance and capital adequacy ratios and the like. But even then, I mean, the level of compliance and stuff, and they just didn't do it. It's business 101, and I know it's boring, but you need proper records and accounting processes and compliance officers. And they started, probably with good intention, and then things get a little dodgy. I mean, I know a chap, and I won't mention names, this goes back to early 2000s. So he was taking people's money and trading, and in the first 3 months, he did 10% a month. He was a good trader.
Okay.
In the fourth month, he lost 2%. So instead of going to Peeps and say, I lost 2%, what did he do? He lied. And he spent 7 years in jail.
Sure.
Because that then escalated to the point that he owed people millions and the NPA got involved. Back then it was the Scorpions. He spent 7 years in jail in Goodwood Prison. And that was just, he wasn't, he was a bad guy in that he stole people's money, yes. But he didn't start out with bad intention. He started out by saying, I'm a good trader, I can make money. Well, why don't you give me some and you give me some and I'll make money for all of us. And that's a great idea. Nothing wrong with it. Except then he made the mistake. The 1 month he had a bad month. Instead of being honest about it, he's like, don't worry, I can hide that because I'll make money next month. And then he didn't. And it all just snowballs.
Earlier on you mentioned that these gamers, they play with people's emotions. But looking at African context, could it be that maybe, because recently, to be honest, there has been a lot of Ponzi schemes, here in Africa, the QZ, what do you call it?
QZ management
recently is the one. So could it be that poverty in our continent could be contributing to these guys just coming here and have a ball and just dupe a lot of people out of their money?
I think you're right. I think it is poverty. It's not only poverty, but let's be clear. If someone comes to me and says that I can do something and make $1,000, I'm afforded the luxury of interrogating it, because would I like 1,000? Yes. But if I don't have 1,000, I'm still going to have dinner tonight. I'm still going to be, a roof over my head. You go to a poor person who's got their 300 Rand social grant and say, I can turn it into 5,000 or 1,000. That's life-changing for them. So they are less they want to believe. They want to believe. So I think poverty does come into it. But you raise a good point, because we've seen a lot of these folks from Asia and Europe and even North America suddenly coming into their scams here. And why are they doing it here and not there? I think there are a couple of things. I think poverty is certainly one of it, so they see a better market. Although truthfully, the person on a 300 Rand social grant they probably can't find that individual, because they don't have data to be on TikTok or Facebook.
Yeah.
They do, but not as much. But I also think they think it's lower regulatory environment. I think also that they can sit in whichever country they are and they're less likely to get arrested. I mean, Sam Bankman-Fried, the oak was in the Bahamas, living it up in a penthouse, and 4 days later he's in a prison cell in America. Like, you do not mess with American regulators. They will find you, they will put you in jail for a very long time. And I think they look at it and think to themselves, South Africa. Now, we actually have a very good court system, but we also have a very overwhelmed court system. Our National Prosecuting Authority, I've approached the National Prosecuting Authority about a number of scams, including PIPCOIN. And firstly, back then they didn't understand what crypto was. They've upskilled in that, but they're busy, right? They're people busy stealing Eskom, and I'm worried about some of,
We only see the effects now of what they were doing back then.
So I think it's regulatory as well. And then I wonder if there isn't some allure as well that we far too often, and this isn't an Africa thing, this is just a thing, that we look at people from other lands and think, well, they're smarter, better, bigger, faster, which of course is nonsense. But, it's like French bread is so much nicer than South African bread. Man, it's all bread, it's made with wheat. One of them has a funny accent. One of them speaks Xhosa. But there's this maybe the bit of mindset. But I think it is poverty, and I think it's regulatory environment. And they're clever, right? They play just long enough, and by the time the FCA or someone starts to arrive, they disappear. They've got their money.
So, when it comes to scams right now, how does one actually going about dealing or reporting? I know you can go report to the FSCA, but are there any other measures that people can take?
So there's a few things. I mean, FSCA, one should, I do, absolutely. But more than that, I think, is then to get the word out. And if you've got social media presences, put it there. If you've got friends asking, tell them what it is. Just try and get as many people warned as possible. Folks like the National Prosecuting Authority, you can speak to them, but as I say, they're at this point, they're just completely overwhelmed in every direction. So there's little that we can do in terms of a regulatory environment. What we're going to be doing more is just getting the word out, chatting like this. I use my various different platforms, whether it be podcasts, columns, or my social media feeds, mostly Twitter. That's where I've got the more following from it, just to put it out. And then I get the hate. I mean, every time I expose a scam, I get the hate every single time. I'm used to that, and that's fine. But maybe what it is. It comes back to, do we wish that we could stop everyone falling for a scam? Yes. Can we?
True.
No. So if we can stop one person, we're winning. Two, we're twice as much winning. So, and I know it's drops in the ocean. It's absolutely drops in the ocean. But at least someone didn't get scammed.
So I've got a question. This is a very personal question for me. I'll put it very public right now. So I actually interviewed, like I told you over the phone, I interviewed Refoin at some point, and I did ask him about the PIPCOIN thing, and he answered whatever he answered. It's fine. It's whatever. It's that story, but. A lot of people tend to feel like because I sat down with him and I interviewed him, now it's some form of I'm promoting him.
Yeah, so look, I mean, okay, so two things. If I got an opportunity to interview Ref Wayne, would I? Yeah, I'd interview him. Is it promoting him? Sure. I mean, it is, right, to a degree. But I don't think, that's the whole thing with journalism. So should we not talk about the serial killer in the media because that might inspire someone to be a serial killer? No, of course you talk about it. I mean, should we talk about and or to Ref Wayne in the sense to make people aware of his background and his history? I think we should. and I appreciate that people will come to you and and say, oh, you shouldn't have given him the airtime. I disagree on it, but I think it's a sort of fundamental, one of the sort of core fundamentals around journalism, which is ultimately what we're doing here. And maybe there are times when you don't, but I think usually err to the side of doing, and then it puts a responsibility on us to make it not into a fanfare interview. And that's the key thing. You can, don't make it the fanfare. You can interview the serial killer without making 100 kids want to go and be serial killers. You can interview them and make them realize that this is a terrible thing and a horrible idea and completely nasty. And I think that then bears down on our responsibility.
But that's the thing, some people don't understand that when we're getting people here on the platform, if somebody doesn't want to talk about that thing, we cannot force them to. And it's within their rights. You can't force him, and you can't say, oh, just leave now because you don't want to talk about that particular thing. It's within their rights. And at times, I think it all goes back to how big the platform is, because essentially you go to SABC, they'll be talking to a lot of politicians that we know. They had some money under their mattress, but that's a
But hang on, there's a thing here, and I'm not going to name names because let's keep away from that for this moment, because let's not have any more lawyers' letters. A lot of these folks legitimatize themselves because you can buy media exposure. So you can go and buy an interview on a channel. You can go and buy a article in a publication or a website or something. So you see, as mentioned, as interviewed, etc., and it's like, no, like this is not legit. So they buy their credibility. So to your point, I mean, it is a fine line. But I think you can't just have a blanket exemption that says, well, no. I think there's perfectly valid reasons for talking to some people. And then, maybe there are some where the line is one you don't want to cross. And I can't think of one off the top of the head. I mean, nothing comes to mind, but it is that area. And I forget what the cliche is, but light is your best disinfectant. Shine light on it, and you do that by talking to and about and sort of bringing it into the open.
But it's only fair that when somebody is being accused of something, you allow him to come to the platform and you talk about it.
And I have it on my Money Web show sometimes where there's a contentious issue and I get the one side and then I go to the other side and I say, look, I've spoken with that oak, now it's your turn. And sometimes they say, no, it's fine. Or something crazy happens and I go to them and I say, I want to talk about it. And sometimes they're happy to talk, sometimes they're not. I think that the not part is silly, but it's their choice. And you know what? And maybe then they actually go talk to somebody else instead. So.
That's true. Sure. Okay, now I'm content. Right? Sure. No, Mr. Simon Brown.
The legendary Simon Brown.
No, thank you so much for taking time out of your day, your very busy schedule, just to come out here and talk to us. And I hope this is not the last time. I would love for there to be another sit down with you, because clearly you have a lot to share. A lot. Like the knowledge from today's podcast. My mind is like doing this, and I know I'm still gonna watch this back a few more times. So I know very much that I know I'm still gonna learn a whole lot more that I missed today. Even though I'm sitting here, I still missed stuff.
Cool. Always happy to chat again. Absolutely.
Thank you so much for coming through.
Going
back to KZN.
No, I'm in Joburg these days. Well, I'm going to KZN next month for some warm. I try to spend as much as winter as possible in KZN.
Hopefully we'll come over to your podcast.
Sure.
Definitely. Would love to be part of it.
Okay, we'll get you guys on.
Thank you so much.
Thank you so much for coming through. Thank you guys so much for watching. I don't know, can people reach out to you? Do people reach out to you, or we'll just leave social media
if you
details?
Go to my vanity website, simonbrown.co.za, you will find all my contacts.
I like how he says vanity website. No, guys, thank you guys so much for watching. We're sitting down here with Simon Brown today. My name is Nqobile Tembane. I'm sitting down with
MJ Givens Kgasi. Guys, see you next week.
All right, thanks, and we out.